Hey everyone, thanks so much for attending our bridge loan seminar. I'm very excited to be here. My name is Beth Little, and I am a local realtor in the Novi, Northville, Livonia, Plymouth, Canton area. I've been in real estate now for about 8 years, and I'm an associate broker with National Realty Centers. I have stumbled across this bridge loan program with First State Bank and with my trusted lending partner, Jim, probably I would say about 2 years ago. And it has been an absolute game changer for my clients. I really want to get it out there more to people who want to make that move, that feel stuck in their house, but they need to sell their house first or need the equity from their house in order to make that move. And so this particular program creates that opportunity to finally make that move with little risk and a lot less stress than you would think. So with that being said, I'd love to introduce Jim. If you want to tell us a little bit about yourself.
Good morning, everybody. My name is Jim Campo. Like Beth was saying, I'm with First State Bank, headquartered on the east side in St. Clair Shores. I personally have been in the mortgage industry for about 15 years. I was born and raised in the Dearborn Heights area, and now I live in Clarkston with my family. And since I do work for a bank, we are able to lend in all 50 states, which makes things great for any loan products that we have, especially this great product that we're going to be speaking about today with our bridge loan. So,
Excellent. All right. And then moving forward, what is a bridge loan with First State Bank? So Jim, I'm going to have you explain the bridge loan about exactly what it is, and then I will kind of elaborate on how some of my clients have used it and how it's kind of a big game changer for us.
perfect. Sounds good. Simplistically speaking, a bridge loan is basically a refinance. What we're going to do is we're going to pay off your existing mortgage. We're going to utilize the asset that you have in your home with the equity, and use that money to help you purchase your new home. Towards down payment, closing costs, all of the fees involved with securing your new home. It's a great program. It's very inexpensive in the grand scheme of the mortgage industry. And the best part is it will allow you to be a non-contingent buyer on your new home without having to carry two mortgage payments into your next home endeavor. So it's definitely a very, very useful tool. It's a lot easier of a process than most people would think after they've done their research on Google. It's a lot different than what you're seeing out there. It's very easy and it's very inexpensive in relation to the mortgage industry fees.
Yeah, absolutely. So what I see as a realtor with my clients again is you've got families that are outgrowing their house. You have retirees that they are still in their family house that they've been in for 40 years and maybe they want to downsize, but they want to tap into that equity first of their house before they move. And it becomes very stressful and difficult to try to put that house on the market and deal with people going through your house and all of the ins and outs of showing and selling, and then having a very limited amount of time to find that next property. Or I've got people that, you ideally want to look for your next property first before putting your home on the market and getting a contingent offer. Now, contingent means that the loan will not close on your next house until your first house is sold. That is what contingent means. So I've got people that want to shop around for their next house, but getting a contingent offer accepted in a very competitive market is pretty much slim to none. So we're just spinning our wheels over and over again. Again, that's why this particular program has been a game changer. So we don't have to have that difficulty and the barrier is up. We can find that next property and then go ahead and put your house on the market. So, and then moving on to the next slide. Again, we're talking about making a non-contingent offer, meaning that once we've talked to Jim and established the amount of equity that you have in the property, what your goals are for the next house with me, what we need to do to get your house ready to sell when it's time, we can then start shopping for that next property. We can go ahead, we can find it, and then once we find the house you love, because we've already prepped ourselves with what needs to be done with the bridge loan with Jim, we can make that strong non-contingent offer. And in a case of using equity, a very strong, maybe 20-30% down offer, which sets us apart from other buyers. And it is not needed to sell your house first. And it has been an opportunity for lots of my buy sells to be able to get into that dream house, which we wouldn't be able to otherwise. Um, I don't know if you have anything to add to that one, Jim.
No, those are all great points. It's you mentioned the market. It is a very tough market out there, very, very competitive. This is just a tool that you can use to set your offer apart and above and beyond others that are probably coming in with less money down or as a contingent offer. So it is a very strong tool that we offer that a lot of people aren't sure about and aren't aware of. So that's why we wanted to do this today to let you know what we can do to help you guys out.
Yeah, absolutely. So what I hear a lot of times what people don't understand about the bridge loans, and then we had talked about why is First State Bank's bridge loan different than maybe other people's bridge loan? You don't have to make double payments. There's only the payment on the new house when you close. I will let Jim explain how that works, but other bridge loans, from at least from what I understand, you still may have to pay on your current mortgage, you still may have to pay on your new mortgage, and then you may have to pay a bridge loan fee, which is a lot of money that people can't afford. So, Jim, I'll let you explain how the no monthly payments works.
Perfect. Thank you. It's so the way it works with us is our bridge loan is a true bridge loan. And what I mean by that is we're going to tap the equity in your current home. We're going to pay off the existing mortgage, and the rest of the money can be yours up to 75% of that property's value to put towards the new home. So the biggest thing that sets us apart from the others is we do not require a payment on that bridge loan while the home is under contract to be sold or is being worked on being sold. What I mean by that is you have 6 months from the time we close on the purchase of your new home, which we utilize the bridge loan to sell the old property. So in the meantime, you're not making payments on the mortgage. There is interest being accrued. Currently, the interest rate on the bridge loan is 6.75%, which is very, very competitive in today's market. And that interest just accrues into the loan and gets paid off like a regular mortgage. Because at the end of the day, we're refinancing your home, paying off your existing and utilizing the money, similar to a cash out mortgage transaction. We will be the new lien holder for the current property as well as the new property. And when the current property gets sold, we just get paid off like a traditional mortgage. Um, like I said, it's a very, very simple product. Ours differs. There's a lot of companies that are offering a bridge loan out there, but it's not really a bridge loan. It's an equity line where they're allowing you to utilize the equity in your home to pull some money out to buy your new home. But keep in mind with those scenarios, you're still making that first mortgage payment. You're now making an additional mortgage payment with that line of credit that they've offered you, along with paying the mortgage on your new home. So if it does take a little bit to sell the home, a little bit of time, days, weeks, months, whatever it is, those are extra payments that you're going to be making that you wouldn't be required with our program. The fee is very, very reasonable. We charge a flat $1,500 for the whole process for the bridge loan. $500 of that is paid up front, and that's covering some upfront expenses like the flood search, the title search. We do what's called a drive-by appraisal, which is a complete appraisal on the property with the exception of entering the home and taking pictures. So that the $500 goes towards that, with the other $1,000 being paid when the loan actually funds when we're ready to close on the new home. So I'm pointing out the $1,500 fee because a lot of you have refinanced in the past. Refinancing can be $2,500, $3,000, $4,000 depending on the scenario. So it is a very, very flat fee. We're doing this as a service. We're not doing this to make a ton of money. We want to help you guys buy your next home.
Yeah.
In relation to that fee also, there are some products out there, some newer bridge loans that are similar to ours, but a lot of companies are charging 2% of the listing price of the home that you're going to sell. So if you have a home that's going to be listed for $500,000, they're going to charge you 2% of that. They're going to charge you $10,000 to do your bridge loan. and their interest rate is still much higher than ours. I've heard they're around 9-10%. So again, that's
Yeah.
another great benefit of our bridge loan, being it is a true bridge. It's very affordable, it's very economical, and it's a great way to be able to be aggressive when you buy your next home.
Yeah, absolutely. And that is why, again, I love this loan. I've probably done it on between 12 to 15 clients the past couple years, and I can't stress enough what a game changer it is. So we'll talk a little bit more about like a scenario of how the value is gotten out, how that is applied to the next house, if you want to kind of explain that a little bit more.
Sure. So with this example, we see the current home that Mr. Smith has is worth around $300,000 with about $120,000 owed on it. His new home is cost it will have a cost of 400,000. So where the bridge loan amount comes from is we're taking 75% of that $300,000, paying off the current mortgage, which is $120,000, and that would net you around that $105,000 to put down on that new home. So that's roughly your 20% down payment, or actually in this case, 25% down payment, plus your closing costs. So that allows you to be very, very aggressive with making your offer on your next home. Keeping in mind our bridge loan, we're paying off that $120,000 mortgage that's currently owned on the home. And then we just get paid back when you sell the home at your leisure within those next 6 months. So it's great for anybody that want to utilize their equity in their home, and not tap into their assets. It's very, very popular with the financial advisors that Beth and I speak to, that we work with on a regular basis, because they get calls all the time of people saying, hey, I want to buy my next house. I want to withdraw assets, hundreds of thousands of dollars from their portfolio. There's tax ramifications. There's, all kinds of negative to pulling money from your assets. And this is just one of those ways to help you do it without pulling money.
Yeah, absolutely. And one thing I want to point out is, the reason that First State Bank keeps everything really competitive with the bridge loan, and again, they're not really making any money off of it, is, they're going to expect you to also use First State Bank for your home purchase. So I just wanted to make that clear that you can't use this bridge loan product and then say another lender for the purchase. It would be First State Bank on both ends, which I am very happy to do. I've very much enjoyed working with Jim. I love First State Bank. Also just on the purchase end, they have the most competitive closing costs that I've seen with any lender, and the service is amazing. So I am always happy to refer on both sides, not only for the bridge loan, but also for the purchase. Just kind of want to put that out there.
No,
So we can
that's a
go
great
on
point.
to the next one. So how do you know if you qualify for a bridge loan? So I will leave this to Jim to kind of talk about what you need to have in order to qualify for this loan.
Yeah, and like it says, it's a lot easier than you think. Credit requirements, income requirements, they're not very dissimilar from a regular mortgage. A 680 credit score is the minimum that we want to see, which is a decent credit score with a normal debt to income ratio of 45%. Those are the factors that fall under your normal mortgage lending. A 2-year work history with any scenario, with any mortgage is required. And then, those are the personal requirements for the mortgage. Obviously you want 25% equity minimum left on the house when we do the bridge loan. And we do this because, keeping in mind there is going to be interest accruing into that bridge loan. So we never want you to be, back to those days of having underwater values. We don't want that to come into play. We want you to still walk away from your closing table when you sell your home with money in your pocket. So we want to keep that 25% equity in your home when we do the bridge loan, which is why if you're sitting on 30, 40, 50% equity in your property, this is a great program for you. And keeping in mind, when you sell the home, you're still going to walk away with money.
Mhm.
And then the last, obviously, the bridge loan being used to eliminate your current mortgage from your loan qualification. So that makes it qualifying for your new home even easier. And using that money for your down payment and closing costs, so you're not liquidating assets to buy your new home before you sell.
Yeah, absolutely. And then I just kind of want to touch a little bit on some other nuances, retirement. So retirement income accepted. If you want to talk about a little bit more about that. So in the next slide, when we get there, we're going to talk about a great scenario with our clients, Susan and Roy, who were retired. So we've got Susan and Roy, and they had a paid off, beautiful Livonia Colonial they've owned for 35 years, and they wanted to downsize to a Canton Colonial. And it was a very competitive multiple offer situation, and they didn't have to sell their house in order to buy to qualify for it, but they really needed the funds in that house because the most they had was maybe to be able to put 5 or 10% down. And it was such a competitive situation that we really needed to just come in a little bit stronger. So, I approached the bridge loan program and it really worked. They were able to put down 55% down on the new condo. And then with that, we actually were able to get an appraisal waiver. So that made our offer look really strong. And we were able to get our offer accepted. And we would not have been able to get our offer accepted if we had just done the 5 or 10% down. We still would have required an appraisal, and we wouldn't have looked as good as, say, some other offers. So it was really, and Susan and Roy, they love their condo, and they, every year we talk and touch base, and it really wouldn't have happened if we had not been able to tack into that equity. And they didn't have to liquidate their assets and pay taxes on that and go through all that. It was truly, really a stress-free situation for them. So that I don't know if you want to explain a little bit more about how that works with retirees.
Yeah, it works out great for them because their biggest concern was they were on fixed income. They're on pension, they were on
Yeah.
Social Security. So they didn't have just easy ways to make more income, work more hours or go somewhere else and get a raise, whatever the case may have been. So that their largest concern was being able to downsize in a home that they would be comfortable with. I believe they yeah, it was definitely a smaller home that they were able to downsize into, and it just the scenario, it made 100% sense to them. Being able to pull the funds, be super aggressive, get their last home. They want to live out their final years in this beautiful new home that they were able to purchase. So
Yeah, absolutely. And again, just knowing that, if who's ever watching that may be on retired or a fixed income and they have a bunch of equity in their house and they may have some investments, you still can use this even though you don't have a regular, you're not working anymore. So that's or if you're self-employed. If you're self-employed, you don't have to be a regular W-2 employee. First State Bank works really well with self-employed people as well, unless you say anything different, Jim.
no,
No.
we embrace all incomes. We're equal opportunity lending. We're not going to discard somebody just because of their income type, like a lot of companies tend to do out there.
Yeah, absolutely. And then another really great scenario that we worked with recently is my client Michael. He owned a condo in Livonia, and he had bought it about 3 years ago. So as we all know, you know, home values have gone up substantially. So he was able to build a good amount of equity in the condo. He wasn't happy with condo life, and he really wanted to have a property on a lake. So he would not have been able to qualify for the amount of funds that he wanted to have in order to purchase, his lake home. So I had approached him, and we would have had to put his condo on the market. We would have had to sell it. We would have had to close, hope that we could get up to 60 days of occupancy, and hope that we could find exactly what he was looking for in literally like a month. It doesn't really give you a ton of time. And it was a competitive situation for this particular property too. And had we not had, the bridge loan to make his offer non-contingent, to tap into the equity that he had so we could put a strong offer in, again, he wouldn't have been able to have the lakefront dream home that he's gotten now. So, and he sold it, and then we sold it pretty quickly. We got it done. And then after we sold it, he still had money left over at closing, a good amount actually. So you really, again, you're not borrowing all your equity, just up to 75%. And he still ended up with money at closing anyway after the bridge loan was paid off. So again, can't stress enough how, but what a great great game changer this is. Now, one scenario before we talk about timeline that I want to mention is there are some scenarios where um, maybe you don't want to actually take the equity out, or maybe you only have a small amount of equity, uh, but you want to make sure that we can still make a non-contingent offer. So if you want to explain, I know that sounds a little bit confusing, but if you want to explain how we can use a bridge loan to just make a non-contingent offer and not necessarily tap in the equity, because we've had a client like that recently where she didn't want to pull money out of her house, but we couldn't make an offer on the next one because her debt to income ratio was going to be too high. So if you kind of want to explain that one a little bit.
Yeah, perfect. So yeah, this actually is a client we just had last month that we wrapped up. But her scenario was a little bit different. She had the money in the bank to buy her new home, but she couldn't
Yeah.
qualify to carry both mortgages. So we did our bridge loan to pay off the first mortgage, or the mortgage on the current home, to be able to eliminate that from her debt to income ratio. Obviously we still need to factor in taxes and insurance because those are continual expenses that we need to factor in. But just paying off that primary mortgage or the current mortgage, getting rid of that principal and interest part of her payment, made the new home affordable from her to qualify and be able to be aggressive. I think she had, at least 20% down of her own
Mhm.
funds. So she didn't need to tap the equity. It was merely a tool to get rid of the current mortgage. And speaking of that tool, going back to the condo with Michael that we had just spoke about in Wolverine Lake, his scenario was a little bit different also, where his condo sold super duper quick. And a lot of people kind of don't necessarily want to spend that $1,500 on the bridge loan when they say, oh, well, we could possibly be contingent, we could possibly sell. Think of it as an insurance policy. Think of this as $1,500 that you're spending on a bridge loan to ensure that you're going to be able to get into that next house without any major issues coming up with contingencies and stuff like that. That's how I kind of like to explain it to people, and that's what we did with her. Is she knew she could sell her house, but if stuff didn't align properly, she didn't want to be denied at any point in time buying the new house. So it's that extra added insurance policy that you need to have a smooth process to get into your next home.
Yeah, absolutely. And there's sometimes where, especially if we're dealing with families with kids, uh, it would be just in general, because I do list a lot of homes, if you can move out of that house, if you can find that next house, let's close, you move into it, we can do the repairs that we need to do, the cleaning, anything that we need to do, the staging, the photography, everything I need to do to make sure that your house gets sold for top dollar. If you're not living there and you're in your next house, it is exponentially less stressful for you, and I have a lot easier time getting that property sold. So it's just nice to know that first property is taken care of. You're moving into your new home. I can take over, make sure that your old home is ready to go. I can sell it, and we don't have to rush, and we can do it in a little bit more of a stress-free environment, if that makes sense.
Good
So,
points.
uh, the consultation. So this is like the little flow of the timeline of how it would work. So obviously you want to have a consultation with me first before we even start this process, because I want to get an idea of what's the value of your home. What do we need to get done in order to make your current home ready to sell? And I can give you a list of small projects to work on to make sure that we chisel those away as we're looking for your next property. So once we've established, kind of the game plan of what would need to be done with your current process, your current home, and we got an rough idea of equity, and I'll let Jim know, say, hey, I think that their house could sell for X amount of dollars. And then I send them over to Jim to talk about, getting pre-approved. What's the budget going to be for the next house? And he's going to start determining what the budget is and then the best way to utilize the equity in their house. They don't have to borrow it all. They can borrow 25% of it, 50, 75, whatever needs to be done. It doesn't have to be all of it or all of that 75. And then once we, establish what budget, we're shopping, we're looking for homes, we find the home, and then we can now make a really strong non-contingent offer because we have a really nice financial game plan inside. So we get our offer accepted, and then from there, I'll have Jim take over on starting how the bridge loan process works when you're in escrow with your next house.
It's Again, this process, if it seems way too simple, it is. It's really that easy. You know, the bridge loan process runs concurrent with your mortgage process for the new home. So essentially, as long as you qualify for your new mortgage for the new home, carrying those taxes and insurance on the current property, both loans are approved. It's not a separate approval process. It is a separate process for us internally, but there's nothing extra special that you need to do to work on both loans. We're doing it behind the scenes. You know, the only from the timeline standpoint, also, since the bridge loan is considered a refinance, there is a small waiting period between when we can close on the new property, the new home, in relation to the bridge loan. There is a 3-day rescission period that is required because technically it is a refinance. And if any of you have ever refinanced your primary residence, you would remember that you close on your loan and then you wait 3 days and then everything gets paid off. You receive your funds, you know, whatever the case may be from your past refinances. Same rules apply to this. You know, theoretically, we would close on your bridge loan on Monday. Tuesday, Wednesday, Thursday will be our rescission periods. We would close on your new home on that Friday. So that's kind of the timeline for that. And again, nothing is required from you above and beyond. We're handling it all in the background.
Okay. I think what we need to make clear though is like you're not going to be closing on this bridge loan before you have an offer accepted on another house. So you're not closing on a bridge loan. This money isn't just sitting in your bank account. What happens is after you close on that bridge loan while you're in, contract with your next property, that money that you get from your equity, that's just going to go to the title company. That doesn't go to you personally. It just goes to the title company. And then the title company then applies that towards your down payment and closing costs. So you're not actually like that money isn't sitting in your bank for you to then bring to closing later. It does go to the title company. So I just want to make sure that I make that clear because I've had people have questions on that in the past.
Correct. Yes. No, that's a good point. And you just trigger it in my mind. Another scenario where when we get to this process, we've had clients, actually, Beth and I believe, had a client where they were in the process with a bridge loan to buy their new home. While this all was going on, they got a cash offer on their current home. They were able to close in 2 weeks, which was before we were closing on the purchase of the new home. So the reason I bring that up is, this is, like I said, it's a tool to get you to that non-contingent offer. And keep in mind, at this point in time, up to this stage in the process, you've paid $500, right, for that initial appraisal, whatever. So worst case scenario, with that scenario, you're out that $500, not the full 15, because remember that $1,000 doesn't actually get utilized until that bridge loan funds. So I just thought, you reminded me of that aspect of it, where if your house is on the market during this process and it sells, that's money that you'll save also by not having to formally utilize the bridge loan.
Yeah, absolutely. All right, and then moving on to the next slide. So we kind of talked about this a little bit more too, like how is First State Bank's bridge loan different than others? So we already talked about, the fees that you're saving, could be absolutely substantial. So I don't know if you wanted to expound on that, but I think we kind of already touched on that one too.
Yeah, the slide just kind of sums it up for them to give them the visual. I mean, it's lots of
Okay.
money that can be paid out there in other places.
Yep, absolutely. And then I think we'll move on to the last slide. So questions, it's a lot of information. So we encourage you to reach out to both or either of us on your particular situation and how this product could get you to your next home goals. So you have my phone number and email there, and you have Jim's phone number and email there. And I believe there's going to be a link to my calendar as well. So you can schedule a call and I can go over, again, my experience with the product has been an absolute game changer for my clients. And I'd really love the opportunity to talk about your particular situation. And Jim is a fantastic resource as well.
Yes, we'd like to thank everybody for attending today, for taking the time out. And if you're not sure if your scenario meets the criteria for the bridge loan, if you think you might have some other scenarios or other needs and wants with your mortgage needs, if this is the path for you, great. If not, we'll find a path that'll work for you. So we're here to
Yeah,
help.
absolutely. Absolutely. Again, thanks again, everyone. And we look forward to hopefully hearing from you. Take care.
Thank you.